Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Wednesday, and we're at the 12th of January, 2022. And our time right now, well, we're quickly approaching, obviously, the 6:35 area as I'm putting this out. I'm in amazement as to how people lose money in futures markets. The one thing I told traders to do is don't go through these government reports, especially when they're called big ones. The market was all geared in on the CPI number, as it was, and when we got taken by surprise on the last Fed minutes. That's generally not a big report, yet it created a big reaction. The next market that would create that was logical. It would be first a testimony hearing yesterday from Fed Chair Powell. Second, the CPI number. Now, they set you up. They told you CPI is going to be running around 7%, and it did. That's going to be the highest in 39 years on a month-over-month basis. And even when you take out food and energy, it's 5.5%, scare you. And yet the risk-on play took place. Traders stepped into the market, not bearish as many thought. In the metal markets, they took off to the upside on the numbers. Energies exploded to the upside today. Bonds and notes rallied, and I was shocked that traders weren't selling them more aggressively. If you were to ask me the one trade of the day that I thought made all the sense, selling the bonds and notes. That makes the sense. Everything else to me on the rallies, the risk-on mentality, makes absolutely no sense. But I'll let you figure it out from there. As you can see behind me, the party and the idea that, hey, inflation has peaked, that is still prevalent in the marketplace. The dollar got smashed. Didn't we just hear on television, every financial station I watch? The dollar's kingpin, these higher interest rates, the dollar's going up. I don't know. The dollar was over 96. It's back down to 94.90. So let's take a look at what we've got. When you look at gold and you see where it's at, the bias is up, which means you're looking for buying conditions, not selling. Use that as your bellwether. When you're under it, you're looking for sell conditions. When you're over it, you're looking for buying conditions. When you take a look at what the market's done, in all honesty, it's done nothing. It has churned the heck out of traders, and it's creating severe losses probably in their trade accounts. The overall trend is still one of lower highs, lower lows. This high did not take out the high here of the 1830 plus area. The market tried a head fake to the downside. It's come back up. And even if it takes out these two highs, you still would have a pattern of a lower low and then a higher high. What else? Look where the resistance comes in at the Bollinger Band. You're knocking on the door of it. 1830-370. So, if you understand Bollinger Bands as I teach them, that's your natural resistance point. I would look for the pros to be dumping if the market gets up there. That number will be slightly over this number if it gets there. And let's assume it doesn't. Well, then on pullbacks, I would look for the support in between the 18 and the 100-day average of closes. Maybe I should put the 200 on here so that you see that, but I don't want too many lines when I do this at night for you. In momentum, do you buy a market when it's overbought? You might. I wouldn't tell my clients to. And my readings, any reading over 70 are overbought. So yesterday, the reading was 71.6. That is Wednesday. That's where you ended up. Tuesday coming in, you are nowhere near that. So I see if the market's going to go up, and this is the close of business on Tuesday, January 11th. If the market's going to rally, I can make my argument that the upper Bollinger Band is the resistance, making your run for it. You're suddenly overbought, and with tonight's action, you're even more overbought. So the Johnny-come-latelys probably come in, they buy against the Bollinger Band, and we serve them their head sometime next week. That could be just a scenario. A better scenario, if this market's going to be bullish, is it pulls back into these areas, tries to find its footing, and eventually starts working on pushing out the other upper Bollinger Band. Doesn't mean it's going to happen, but it would be the better scenario. When we come to the gold-silver ratio, suddenly silver is gaining on the gold market. Now, I'm using the Feb gold versus the March silver on that, but it's still, the ratio was falling down. So what's silver doing? Aha. The silver market made a run today and got as high on the day right here at 23.26. What high do you think this number is right back here? I say it's around 23.30. Yep, 23.30. So as the market's making its run, what would you expect to happen if you continue up? First thing, are we overbought? Oh yeah. Number two, same pattern as gold, a lower and low and still lower highs. If it runs there, I think the pros, I'm a pro, I think the pros will be saying to their clients or for themselves, hey, if I'm long, I'm coming out. I promise you, I would not tell a client to be long that going into the report today. So I don't see anything that's exciting there. The easier trade of the day, and it caught, I think, so many people by surprise, was copper advancing this much, up 3% today. If you get my full research, one of the things I've been telling you and telling you here, when I write and in this report, I said, I believe that Omicron is not the serious disease you think. I know it's overwhelming hospitals. I know there's people in mass numbers getting ill. But if you're vaccinated, you're not one of those people. You're not dying in the hospital. You're getting COVID. That's not going to change. You get the flu too. But you're surviving it and your life is going on. That is not bearish, this. Second part, very important part. I wrote yesterday in my research, China has decided, smartly so, that the property situation is too severe to just keep cracking down. And they've instructed the banks to ease. Now, if they instruct the banks to ease, and we were talking here about that, that is not something I want to be short copper on. A home, build homes, apartment buildings, whatever, that's important. It's like XME when I talked to you in the Spider ETF video. I did not think the market was going to go through this upper Bollinger Band. I'm the first to tell you. I don't see anything here. I see reasons not to be long and short. Neutral, and this was Tuesday. Today's action just absolutely took the market by storm. But in all fairness, I haven't wanted you to be bearish for how long in these tapes. Certainly not telling my clients to buy an upper Bollinger Band that isn't trending and is overbought. I'll let somebody else carry the day. I do think the pros are doing one thing there. They're coming out, and they'll buy again on the breaks. They're traders. They're not investors necessarily. Platinum's not in a trend. You have a higher high, lower and low, and you're caught in this Bollinger Band. And in the palladium, this is the only market that is trying to establish an uptrend, but it's got an anchor on it because momentum is pointing down, not up. Let's assume the market can rescue itself and start an upswing. Look for serious resistance between the 2,000 level, the 100-day average, and the upper Bollinger Band, and you got to get beyond that. What happens if you take out yesterday's low? I'm talking today's, obviously, of 1861. You destroy the bullish pattern. So what do I think? I think the well-heeled traders are probably looking at the support at the 1895 level, but it's still a $30 risk. I don't have that kind of money to put at risk, so I'm waiting on the market. The dollar's overdone. Yes, it could reach for the 100-day average. Don't play for that. You're under the Bollinger Band. The odds of staying under a Bollinger Band 5% of the time or over it. Okay, you can get these patterns, and I see it. But I've got to tell you as a chartist, you certainly look like you've got a serious amount of resistance now above the market, the exact opposite of what all the so-called television experts out there are saying, oh, the dollar, that's the play. It's going to be the year of the dollar. Maybe, not right now. I don't know what makes it the year of the dollar. Haven't figured that one out at all. And that's why I say at the beginning of a year, so many traders at the end of the year write special reports. This is the trades you should be in. Why? The game changes too often. Why not do a weekly report that makes a lot more sense? That I'm all in favor of. So you put it all together. I think it's a dangerous time right now. And I think tomorrow's going to be one of those days where the markets try to play again. And that's where we come in. For those of you that are futures traders, how you don't take a look at all the information we write throughout the day, not once in the morning, not at night, all day long, giving you what's going on, who's doing the buying, who's doing the selling, what the option boys are doing, what the spreads are saying in the market. Be it the grain market, and you had a serious grain reports today, the soft commodities, the energies through all that. Why would you not do that and look at the special reports that I like to put out in the technical reports? It's yours free to take a look at it. Just go to our website, www.iraepstein.com. On the upper left, it says free offers. Give yourself a trial for this. I think you'll like what you see. I'm Ira. You have a good day.